As we move from vulnerable technology, we're now going to move into economic instability. And what is the consumer impact? Many have a different take on the economic future, but as we all agree, there is instability, right? The industry thought leaders will share inside-the-box strategies, from turning collections upside down to using data to generate profit. And it is generating profit in a not-for-profit business model where members come first. So right away in underground fashion, I'm going right into the next. So you guys ready? Let's bring up our next panel. First, Samantha Paxson, the Chief Experience Officer at Co-op Solutions. Sam shatters the norm with unique consumer perspectives from the payment front lines that can bridge economic divides. Next, we have Jay Mossman, President CEO of Akuvo. And he's the former owner of Accelerant. Jay is now on a mission with a new QSO to upend the collections process and make members for life. Next, we have Aaron Long, the head of sales at Zest AI. AI is a focused lending platform, and Zest is here to fight for all members through a holistic credit scoring approach. We have Mr. Tony Battelle, the president and CEO of Origence. Tony and Origence know members need loans, and credit unions must sustain lending and weather these economic change. And finally, we have Tom Davis, the president and CEO of Trellance. It's all in the data, and Tom will share how digging deep with big data will lead the way to serving members individually and personally. Let's welcome our panel.
Thank you, Brandy. Thank you, Brandy, and thank you, gentlemen, for joining me this morning. It's so interesting how Sue and Brandy and the team put together this agenda today, because it all tends to build on each other. So one thing that I love that Lois said is that how do we pull people out of poverty and despair? And when we think about the credit union space and we look at our model, we look at long-term success of our members. And how do we look at our value proposition? We look at that through giving great rates on loans. And what did we just hear from our previous panel? What Amber said is that she runs her small business off of Venmo because she trusts it. We find that trust is focused on convenience and accessibility. And how do we look at not only long-term financial success for our members, but the short-term, day-to-day capability that we deliver through money movement, through payments, through the daily engagement and interaction. We're actually in a battle for our members' attention, moment by moment by moment. And so how do credit unions become the most essential type of financial services in the market today? That's the question, because we have members that are needing to be lifted out of poverty. And so when we look at our model, does our model work to help impact overall member economic success? So we have a tremendous panel today, a few things that we can look at in terms of what our members are facing and kind of what we're facing too. We have incredible inflation that's happening in our country. We are facing rising interest rates, so members are having a challenging time having access to capital. We're seeing members move from debit transactions to credit transactions, so they're engaging much more using credit cards to be able to bridge the gap. And I was just reading in NPR that spending is up. They're actually spending, but they're not being able to look at short-term goals versus long-term goals. And so how do credit unions get in the consideration set? One thing that I'd argue is that when we look at our overall model and we say, how are we successful? I know Lois said we look at assets, we look at loan growth. When we look at overall economic instability, we need to think about how do we look at our own growth metrics as credit unions, our own economic index, we look at interest income and non-interest income and say, how are we helping our members in their daily lives? How are we the trusted advisors that show up and we are demonstrating we have the capability to meet members' needs where they are? So when we are understanding daily member lifestyle, how are we there for them? How are we building trust in a way that they aren't just looking at trust as you have the character that I know you're going to do the right thing for me, but you actually have the capability to be there when I need you in my daily life, that credit unions are the primary financial interaction throughout the member's day. And lastly, what does our service model look like? We just had AWS on the stage a moment ago. Our service model is being set by Amazon. Our service model is being set by Google. Our service model is being set by Meta. They are the ways, this is how members expect to engage with the brands that they do business with every day. How do credit unions think about their digital engagement to help members understand their overall financial position and then be able to have members be able to take action on their financial position? Members are incredibly empowered. They can do everything through their phone to manage their financial life. How are credit unions thinking about the ways that they engage the member to win that loyalty and that trust moment by moment by moment? So I work for a payments company. I work for Co-op Solutions. I'm the Chief Experience Officer. My focus is to really make sure that credit unions are looking at payments and financial interaction as a path to growth. And you have incredible data in that. We process 8 billion transactions a year. Yet that's an incredible data set that you're sitting on that helps you understand how your members are behaving. How do you harness that data? Help members understand their disaggregated financial life and then be able to make really good choices. Financial instability and economic instability is not just a financial literacy program. It's not. Overall financial wellness is helping members shift their behavior through their daily interactions and their daily usage of their daily cash, helping them meet their short-term goals and long-term goals. So as the preface of this overall panel, I'd like to get more of my colleagues' insights here on how you think about economic instability and how that impacts growth strategy for credit unions and their service model. And Jay, why don't we start with you?
Thank you. Good morning. Is this on? This is on, isn't it? Yep. Okay. The company that we have really focuses on what happens when things go wrong, when they don't make those payments. And one of the reasons that I kind of got back into this business was to really rethink and turn that whole model upside down. And you mentioned about behavior. One of the things that most of you that have collections departments are still doing it, I think, the old way. You build those queues of how many days delinquent and how big the delinquency is and the type of account, and you start making a bunch of phone calls, but you're not paying attention to the behavior of the member. You know, are they better served by answering texts versus calling? I mean, we're starting to see changes in those kinds of things. But also, are you looking at the behavior of your own employee? Which employees solve those problems better than others in being able to engage with that member? Again, what I find is that some of them say, well, we just do A's, we'll take care of the A's, and this one will take care of the B's through whatever. But are you looking at which of those members are in a better position to deal with certain employees of your credit union? Some are very good at what I call the short term, the early stuff, dialing for dollars as we call it, and others are much better at solving problems long term. All that is driven underneath the covers by data, and these guys know the data very, very well. But we're looking at data to figure out a way to better engage with the member. We've actually included on our board membership people that understand digital behavior and how to better interact through digital means as opposed to human means. And so we're looking at data like we never have before in trying to help that member. Not all delinquent members are bad members. As a matter of fact, you don't often have a chance to interact with your member, and guess what? When they go delinquent, you do. And sometimes that opportunity of how you interact with them can really make a difference in taking that member and helping them, as opposed to putting them out to pasture, so to speak. And there's also an opportunity for you to absolutely make them a member for life, and also being able to touch other people and make them members for life somewhere down the road. So again, I think it's the data, and I'm sure these folks here are going to talk about the data, but we're starting to take a look on the collection side, the delinquency management side, of how we can use data to look at behavior, both of your employees and of the member, to figure out a better way of solving that problem. So,
I love the idea of delinquency as an opportunity to engage the member. I mean, what an opportunity to help the member. Thank you for that, Jay. And Aaron, I'd love to turn to you and how Zest AI thinks about growth strategy and the service experience with economic instability.
Good morning, everyone. Is this on?
Yeah.
There we go. Thanks for that. So the good news is that with everything going on, your members still need your help. There was a recent poll out there from Harris Marketing and Analytics Research Company. 8 out of 10 of your members feel that you guys are more suited to help them when times get tough than the banks. So that's a good thing. So how do we help them? At Zest, we believe in 3 different ways: smart, inclusive, efficient, and how you guys can help them. So smart, you have to have more data. I think that's kind of the premise that we're talking here. You have to have more data, and you have to have better technology. And what that does is that gives you better insights into your members. So think of a TV from the 1950s, a black and white TV. I think they had TVs back there then. Compared to the TVs now, which I think are 4K or 5K, right? They're broader, more definition. With more data and better technology, you're able to make decisions on your members in a lot better way, in a smarter way. The second one is being more inclusive, and I think this is where I love the statement Brandy was talking about earlier on do better. This is where we can do better. 20% of all Americans are difficult to score and make decisions on, right? So if I can do my quick math in my head, right, that's 1 in 5 people. So 1, 2, 3, 4, 5, right? Even if we did it around the room, that's a lot of people in this room. Imagine across the country. And so what happens when you can't decide on that 20%, you kind of move on. And when there's a financial or economic issue in the marketplace, financial institutions typically do a credit tighten, right? They shrink that credit box. And so they start to make it easy. They make it easy on themselves and make decisions on the top, on the A paper. But what happens when we do that? We leave a lot of people out. Folks like me, right? Women, people of color, the entire protected class gets left out. That 1 in 5 are left out. And so over the last few years, we've talked a lot about DEI. Even at GAC, the last few years, we have that topic arise, and I think we all know that it's a good thing to do, but we're trying to figure out how do we do it better and what's the best way to do it. If you've got more data and better technology, you automatically make folks and make your members be part of the game. They get a chance at bat, right? You become more inclusive. And then the third thing is more to be better efficient. So a few weeks ago, I spent time with my nephew. He's in his mid-20s. He's making a little money. He lives in Florida. And so I was down there visiting him, and he took me out to lunch. Thank goodness he paid. And he was so proud to pay, and he brought out his Apple credit card. And he talked about how cool it was. It was a white plastic sheet, metal credit card, and he talked about how easy it was to get it. Rest assured, though, he lives in Florida, and I gave him some credit unions, and now he does have a credit union credit card that he uses. But like most of your members, 74% of your members expect instant response time. That's a big deal. And if they don't get it, guess what? They go other places. We have to figure out how do we become more efficient. And over the last 18 months, I've talked to a lot of you guys in the room. Right now, credit unions are about 30 minutes or more with decisions, right? We've got to get that faster. We have to have instantaneous decisions. And we all talk about member experience. I know that typically on an annual basis, increasing or improving member experience is a top strategy. So think about efficiency wraps right under that umbrella, right? So smart, inclusive, efficient is how we're going to help them out.
A lot on data there, too. So many credit unions talk about data and then say, we have data. We don't know what to do with it. We don't know what actions to take from it. We don't know where to put this into our business processes. And it just shows that what you just explained is that it shows that we're leaving service on the table, that we're not engaging members and really helping helping to be the most essential type of financial services today. So Tony, how do you think about it? Tell us about the lending side of the business.
Well, first of all, it's great to be here above ground at the underground. I just had to say that. And this is the first time I've been in this venue. It's very interesting to have, kind of the right and the left here to talk to. I really, what I wanted to talk today was really about three things: liquidity, liquidity, and liquidity. What do you guys think of that? That's I do want to talk about that, but I really, from an economic perspective on your members, and in our case, we're Origins, the lending platform that runs Cuddle, also indirect lending and the dealers and what's going on there, and then also the credit unions themselves and liquidity and how we're gonna serve our members better. And I think one thing I would just say at the top here would be, we need to do better. I think there's no doubt about it, and I think the way to do better is to work together. We in our organization, we talk about credit unions collaborating and hunting together, but also working together with other vendors and making our platforms better. We just interface with Zest AI and many other vendors that are here in the room, and to try to create a platform that's better for your members. But I would say that from a member perspective on buying cars right now, they are under a lot of economic pressure, obviously. There's so many things that went good for them in the sense that COVID gave them a lot of money to spend. They've run out of that money now. They were buying cars like crazy last year. That has slowed down a lot due to affordability issues. There are more cars out there at the dealerships. Some, mostly domestic cars, are coming in a lot faster. But the affordability, they don't have, the prices of the cars have gone up. During COVID, used car prices went up 50%. From 2019, they went up 50%. They're still up there. They're starting to come down as more new cars come into the marketplace. The used cars will come down somewhat in price. But our average loan balance right now for new cars on our platforms is $36,000. It's the highest it's ever been. And that's a little diluted because that includes refi loans too, and $30,000 for used cars. Again, the most it's ever been. So affordability is a huge issue for credit for members right now. So that's on their side. From a dealer perspective, you guys feel sorry for the dealers? They're making a lot of money right now. They're going to make good money this year, but I just saw the NADA had a breakout session from one of the economists, and he calculated that the dealers in 2022 made more money than they ever have in a year past. Their gross profit margins were $55 billion last year. This year, because of interest rates, though, dealers really didn't have. They didn't have a lot of costs. The cars were coming in; they'd sell them right back. There was no flooring costs, which they have a lot more now of that today. And then the interest rates themselves just keep members away from the dealership. So they're definitely going to have a worse year. But this economist said it's still going to be somewhere in the $28 to $35 billion range for gross profit, which will be the third best year they've ever had too. So that's still not too bad. But dealerships are hurting in a way right now. They definitely don't have the kind of transactions that we had last year. And then from a credit union perspective, I would just say that last year was our best year ever, and I think some of your best year ever as far as making loans. The challenge that we had in a rising interest rate environment is credit unions generally didn't raise rates fast enough, so you didn't attract money, or money actually left the credit union. And you didn't raise rates fast enough, so you made a lot of loans. We did $78 billion of loans last year on our platform. $56 billion was the year before. So again, it was an incredible year. So now we're into this world of 2023, where last year we were funding $6.5 billion on average a month. In January we did about $4.2 billion, and it's going to go down even more in February. So that is the main topic, I guess, that I would say going into 23. In order to do better, we have to have money to lend out. Because I think the issue today is the loans you can make today at the new rates that you're able to make them is probably the best profit margins you've ever made. It's now, how do we get the money to do that? And, again, liquidity is an issue. I would like to know if anyone has an answer on that. But I think it is about managing, the balance sheets more aggressively in these interest rate environments. I mean, interest rates doubled last year. We probably should have moved rates up a lot faster. I mean, in hindsight, that would just be my macro view of things, and maybe yours too. But now it's how do we find liquidity to help members get a loan at the dealership? And I think we are looking at on a flow basis, possibly doing some securitizations with some of the players out there today. We have set up our platform to help do that. We have watermarked the contracts and make so that we can make them into a securitization. We did do one with one credit union last year. So there is definitely a concern on that, and I'd sure like to continue to help members buy cars and make loans. But let's work on liquidity this year. Has anybody got a lot of money? Because I'd like to help you make some loans.
I love this focus on liquidity because I hear a lot of credit unions talking about, well, I'm over-loaned out, I'm not getting new deposits in, or deposits are coming in and then they're going out just as quickly. Where's my new membership growth coming from? So this whole idea of designing the credit union around the member to look at the holistic solution set that a credit union provides really helps build more toward the lending side of the business. Right. So Tom, how do you feel about all of this at Trellance? Tell us a little bit more.
Well, thank you. Well, first of all, they asked Tom, the tech guy, to be on the economic instability panel. I don't know why. So I'm going to take a little bit of a different tact at this than everyone else. Everybody heard of ChatGPT? Anybody? Yeah. Okay, all right. November 22 of last year, $29 billion valuation came out. It's an open AI platform. You can go get an account yourself, and you can have a conversation with an AI bot, and they will tell you anything and everything you want to know about your life. I've asked all kinds of questions of this. Sometimes they won't answer, sometimes they will. I did ask the meaning of life, and the answer was not 42. Anybody know what 42 is? It did not. So then I asked, why is it not 42? And then it gave me a whole explanation of why it's not 42. For all of you that don't know what 42 and the meaning of life, read Douglas Adams. It's a fun book. So anyway, I asked it all those questions, and I said, well, you know what? I'm going to use it for this. All right, so this is what ChatGPT said when I said, what is the impact of economic instability on members of credit unions? I'm just going to read a little bit of a summary because the conversation between me and this cloud-based HAL thing lasted for quite some time. Here we go. Economic instability can have a significant impact on members of credit unions. Credit unions are financial institutions that are owned and operated by their members, and they are typically not-for-profit organizations. As such, credit unions are often more focused on providing affordable financial services and products to their members rather than generating profits for shareholders. All right, they know us well. You know what? The first time I typed it in, I typed in customers and banks because I didn't think it would know what credit unions were. No lie. Then I said, you know what? Let's see if it does. And that's what it said. Thought it was awesome. When economic instability occurs, credit unions may face challenges related to loan defaults, declining investments, and increased regulatory scrutiny. This can impact the financial health of the credit union and in turn affect the services and products that it is able to offer its members. So remember, I asked it what the impact of the member was, not the credit union. So it starts with the credit union, and then it talks about can the credit union then continue to serve the members. For members, economic instability can result in job loss, reduced income, increased financial stress. This could lead to difficulty in paying bills and loans, which could result in delinquencies or defaults. In addition, economic instability may lead to reduced access to credit, as we just talked about, as credit unions become more risk-averse during times of economic uncertainty. This is crazy. This is a computer. However, well, I'm assuming it's a computer. However, credit unions may also be well positioned to help their members during times of economic instability. Credit unions often offer more flexible than traditional banks in their lending policies and may be willing to work with members who are experiencing financial difficulties. Wow, it like knows us. Credit unions may also offer financial education and counseling to help members navigate difficult financial situations. Overall, the impact of economic instability on members of credit unions will depend on a variety of factors, including the severity and duration of the economic instability, the financial health of the credit union, and the individual circumstances of each member. This conversation went on and on. I asked about inflation, I asked about unemployment, and it talked about offering lower interest rates. I could go on and on. It's literally pages.
Tom, you just proved that they don't need us panel anymore. We could just ask
ChatGPT
any question we want, right?
Thank you.
You know, we've used it too. I'd say it is an amazing thing. I would encourage everyone to play with it. Our HR department's writing their job descriptions using ChatGPT. Our development side is that they actually have a subscription. There is you can pay for it and get a subscription to it. So our software developers are using it to help them. So it's an amazing thing, and it's going to change the world.
It is. You're right. I mean, we're doing the same thing. We're using it in the software development. It's in some cases doing 80% of the initial code without any human. But if you, I posted, I asked it, can you create a song for credit unions? And it actually created an anthem for us. I posted it on LinkedIn,
I saw this.
and it took a swipe at the big banks. So take a look at it. It was amazing. It just blew my mind.
Can you sing it for us right now?
No, I can't. I actually followed on posting, can someone else put music to this?
This panel's getting out of control.
So my point in all of this is it. Am I on? Oh, hopefully I'm on. Hey, it is exactly what you said, Tony. I mean, if you all are hesitant with the cloud, don't worry. It's about that wave's about to knock you down, and the next wave's about to come on you. You've got to go to the cloud in some way, shape, size, or form. You got to get there. There's no way you can interface all of your systems with what's going on in the cloud with on-prem world. I work for a tech company. I'm a tech guy. We can help you get to the cloud. We can help you with hosting. We can help you with all this other stuff. We can help you with the data, and we can help you augment your staff with people. But really, at the end of the day, why we do it all is because I'm looking out the window in Lafayette Square, and all of this stuff that ChatGPT will tell you what to do, you still don't know who needs what. Who is facing unemployment, who is facing, which one of your members is, having a hard time not being able to eat, maybe even has a job but just can't keep up with their payments. It's the who and the community part of it that the very first panel got up here and talked about. Data and technology is cold. It just does whatever you ask it to do. And I hope that I never see the day where the human element is not taken care of by a human. And I'm a tech guy, I live and breathe everything that's tech, but I have a heart as big as can be, when it comes down to the human element of it, and I don't think a computer can ever match what we can do in this room. But you have to take advantage of the technology. You have to, because we talked about it. I love the TV example. The world is much clearer now because of the technology, and the expectation is that you do see your members very, very clearly, and then you understand their lives, and that when you answer the phone, it's not, "Hi, credit union member." It's, "Hi, Emily. How are you today?" It's, "How can I help you? I see that you lost your job. What can we do to help?" It's being on the front end of that conversation. And you're not going to get all the data that you need to be able to do that from within your credit union. You're going to have to reach out to your financial partners, such as us, your data partners, such as everybody on this panel, and they will help you get that other facets of the view of your member so you can actually help them, because they're humans at the end of the day. They are not computers, even though we interface with them all day long. These are human beings. And they need our help every now and again. I needed it when I was in my younger years, and it's my turn to pay that back. And it's our turn in this room to make a difference. So there you go.
It's a great way to close it out, Tom. I think what we're saying here is that we have to be completely member-centric. I mean, it comes back to our people helping people mission. This is the new member centricity. How do we design our credit unions around a member of one, and really make sure that we're surrounding that member with and anticipating their needs and being there for them? So thank you to the panel. Appreciate it.